If you take care of business during tax saving season, which is right now, you ain't got to worry about nothing during tax paying season. So let's do what we need to do now so we don't have any worries later. What's up, family? Welcome into another episode of Tax Free Living, where I, Carter Cofield, teach you entrepreneurs, business owners out there how to live tax free. Okay? So today's episode is going to be very timely because right now we're in the last quarter of the year. And for those of you all that don't understand the importance of the last quarter of the year, let me explain. You see, there are two tax seasons, right? Most people think there's only one. Most people think tax season is January through April, right? That's the only time they think about taxes. And that is one of the tax seasons. We call that season tax paying season. So January through April is tax paying season. Now there is a second tax season, and that tax season is called tax saving season. And tax saving season is between July and December. The second half of the year is where you need to be learning and implementing tax saving strategies so that by the time it rolls around the tax paying season, you ain't gotta worry about nothing. Like, if you take care of business during tax saving season, which is right now, you ain't gotta worry about nothing during tax paying season. So let's do what we need to do now so we don't have any worries later, okay? So before we talk about today's episode, do me a favor, hit that like button, hit that subscribe button, share this with a friend, because today we're gonna be talking about the top 5 year-end tax strategies to help you live tax-free in 2023. So I hope you all are as excited as I am, because I personally am going to be implementing all 5 of these strategies to make sure that I pay as minimal amount of taxes as possible. Okay, so let's get into it. Strategy number 1, establish a retirement plan in your business. Okay, most business owners don't realize that because they now have a business, that business is entitled to having its own retirement plan, okay? And you have many options. You can set up a regular 401k, you can set up a solo 401k, you can set up a simple IRA, you can set up a SEP IRA. It all depends on what your business needs are. Now, my 2 favorite retirement plans to establish as a business owner is either a SEP IRA or a solo 401k, okay? Both of these entities allow you to put away up to $66,000 per year while simultaneously getting a $66,000 tax deduction in the process. Okay? So you can contribute $66,000 to these 2 plans, right? And increase your assets, and the money that you contribute to these plans is 100% tax deductible. Therefore, you are able to get a $66,000 tax deduction in the process. So I personally have a solo 401k. It's my favorite retirement plan to have. And you can establish one right now. Like, you can establish one before December. Matter of fact, here's the crazy part. You can establish the plan in December, and you can wait until January, February, or March to contribute to the plan. So you can set it up in December, get your money together, contribute to it before you file taxes. So let's say you could contribute to it in March, and you can still get the tax deduction as if you contributed to it last year. So I advise all of my clients, all of my students, establish the plan before the year is out. I don't care if you don't have the money to fund it yet. Establish the plan before the year is out so that next year we can fund it and we can take advantage of the savings from that retirement plan. Okay? So strategy number 1, establish a retirement plan and fund the retirement plan. Okay? Strategy number 2, purchase equipment to take advantage of bonus depreciation. Okay? So last year, guys, it was the golden years. It was the golden years because in 2022, 2021, and 2020, bonus depreciation was 100%. 100%. That meant that you can literally finance a piece of equipment like a vehicle, and you could put no money down. You could finance the vehicle, and you were able to write off 100% of the purchase price of the vehicle as long as it weighed over 6,000 pounds, right? So we literally had people walking into Cadillac to go buy an Escalade for $100,000, putting no money down and getting $100,000 tax deduction in the process. They were basically getting paid to get a new car. Now, it's no longer the golden years, but it's not the dark ages either. You see, in 2023, bonus depreciation is still 80%. So you still can get equipment like a desk, furniture, or a vehicle, and you can still write off 80% of the purchase price of that piece of equipment. You can write it off in the first year, right? So it's very important that we take advantage of this deduction before the year is out, because in 2024, it goes down to 60%, 2025, 40%, 2026, 20%, and then it'll be gone unless they make changes. So this is one of the few years that we have left to get the getting while the getting's good. So if you have a piece of equipment, camera, computer, table, car, vehicle, like whatever that you need for your business, purchase it this year. And you don't have to pay cash for it. If I can get a good interest rate, I will finance it, because you still get 80% of the deduction, whether you pay for it cash or you finance it using credit. So that's strategy number 2. Okay, strategy number 3 is, this is probably one of the strategies that most people miss out on. And that is making sure you have the right entity based off the revenue level of your business, right? So most people assume that an LLC is the best entity you can have, right? A LLC is a great entity. It's a great entity for when you're starting out as an entrepreneur, but there's gonna be a level, a time period, a revenue level in which you're gonna upgrade that LLC to an S corporation. And that net profit level is $40,000. So once you're making over $40,000 in profit in your business, you need to upgrade your LLC to the beloved S corporation. It's gonna help you save tens of thousands of dollars in self-employment taxes, right? So if you're looking at your revenue or your profit in your business, hopefully you like using QuickBooks or some software to be able to track the profit of your business, right? So if you're looking up at the profit of your business, like, yo, like we're like $80,000 in profit. We need to upgrade our LLC to an S corporation, right? I did a video a few months back. If you search Carter S Corp, the video will come up. I give you a walkthrough of how to upgrade your LLC to S corporation. So you want to make sure you have the proper entity for the revenue level of your business. Okay. Strategy number 4 is accelerate expenses and defer income. Okay, so if you're a cash basis business, which most of you are, if you're making less than $25 million, you're a cash basis business, you are taxed when money comes in, and you get write-offs when money comes out. So one strategy I'll recommend business owners to do, if they can, is to first of all postpone revenue. So if you're providing goods, services to your clients in December, you can say, hey, I'm going to complete the work in December, but I want to put you on net 30 terms, which means I don't want to be paid until January, right? So you were able to still do the work, have the contract, the money is owed to you, legally binding contract. You're just telling them they don't have to pay you for 30 days. Because let's say you're going to make $50,000 in the month of December. That's $50,000 of money you're going to be taxed on. So if your business can survive without that $50,000, why not collect it in January, giving you 12 more months to find deductions so you don't have to pay taxes on that money, right? So if your business can withstand it, just defer the income 30 days. While you're deferring income, you can also accelerate expenses. So what do I mean by that? Well, one thing that I do, and we do in my company, is we prepay a lot of expenses in December that we know we're gonna need to use in January or February. So if it's software expense, we're just gonna pay for the software for all the next year. If it's a contractor, we're gonna prepay some of our contractors. If it's ads, we're gonna front load our ad account. If we're gonna spend the money in January, February anyway, and we have the liquidity to do so, AKA have a credit card to do so, you don't gotta use your own portion of money, I'm accelerating all these expenses on my credit card that I know I'm gonna have to pay in January or February anyway, and I'm paying for them in December, so I get the tax deduction today, so it could immediately lower my taxable income in March or April. Think about this. If I can find an extra $100,000 of deductions in December, I'm going to immediately be rewarded for it when I file taxes a few months later, right? So if your business has liquidity to withstand it, you can postpone revenue and simultaneously prepay expenses. A phenomenal strategy I use every single year. I hope you use it too. Strategy number 5 is to keep the money in the family. What do I mean by this? So I recommend, if you're a business owner and you have kids, to hire your kids into your business. Make them do actual work in your business so they can earn actual wages in your business, right? So let's say you have 2 kids, ages 10 and 12. You're able to pay them $13,850 each if they're doing actual work in your business, and you get a $13,850 tax deduction each, right? So if you did this, 13,850 times 2, you would get a $27,700 tax deduction. But wait, it gets better. Your kids will also receive this money tax-free because the standard deduction, which is $13,850, will wipe out all that income that they just earned. So you get a tax deduction, your kids receive the money tax-free, but also now that your kids work for you or work with you, you can take trips or have family events with your kids and with your family and write it off as a board of advisor or business meeting. So let me just give you another example. You can hire your kids in your business. You can put your wife or your spouse and your sister-in-law or brother-in-law on your board of advisors. So your family's on your board of advisors, your kids on your payroll. When the family comes over for Thanksgiving, that's not Thanksgiving. That is a board of advisor meeting. Everybody either works with you or they're on the board. So if you rent an Airbnb out for Christmas or Thanksgiving, you get to write off the Airbnb, you get to write off your travel, and you get to write off 50% of the food that's catered to that event. So now you're writing off the holidays. You see, guys, these are 5 phenomenal strategies that if you implement during tax saving season, you will have a drastically better result during tax paying season. So hit that like button, hit that subscribe button, and comment below which of these 5 was your favorite. I'll see you all next time. Peace.